Hey, welcome back to the Hub channel. I have Jeff Beamer here with me again today, and we have a ton to discuss. Obviously, busy market week, Jeff. A lot going on in the US market. And if you guys don't know already, Jeff is a senior strategist over at our Evo channel. He is a hedge fund manager. Jeff knows what's going on in the market, so you're going to want to listen to what he has to say. Jeff, how's your week been so far, and what do you have to tell us
Hi,
today?
Brandon. It was an interesting week last week when everybody was focused on Jackson Hole and what the Fed was going to do, and it was really a kind of a hold your breath moment, and then nothing really happened. So we got through the weekend, no dramatic stuff, and today markets rallied a little bit. Let's go ahead and pull up a chart here of the Spider Index Trust. Interesting that we held our upward sloping trend line. I've got two trend lines here, and we have held that position. Now, a lot of managers, including myself, we have gone a little bearish over the short term. I have a target. I've talked about it for a couple of weeks, which is down here at the 430 level on the Spider Index Trust. So I could legitimately see just a very simple ABC pattern happening here to where we go from this top and move down to the bottom. That's an A, and then back up. That's the B, and then maybe a little push down. Now, I would not be surprised if that happens. Now, let me throw a little study on here. And what I'm going to do is talk about how when we have a Elliott wave count on the chart, you'll notice that we are in a 4-wave pullback with a target. So we've pulled back almost 50% on the low, and we have a target up here at 480, roughly 480. Now, my end of the year target is 485. So the fact that we might already be making that move, we will adjust accordingly. Let me show one more little thing, and that's my moving averages. So you can see what's happening here. We have trend line support. I've got my short-term moving average, which is my 21 period moving average, coming down. And really what I'm waiting for is if we get a solid cross and a confirming close above that line, above that moving average, then I will set up for the next bullish move. Okay, so that's where we are in the broader markets. All right, looking at NASDAQ, everybody's focus the past few weeks has been on technology and where specifically on some of these AI related companies. You'll notice that I kind of drew my own version of an Elliott wave pattern on here. Okay, let me take that off here real quick. We can get a little cleaner chart. All right, so let me just, well, I won't take the time to maneuver with that now, but you see that if I zoom in here a little bit, you can see that the NASDAQ, the Qs, are really kind of in the same place. We are waiting for them to cross above my short-term moving average before we go bullish once again. Okay, so right now we're kind of set up for the markets to pull back. We have a few bearish positions on. Another market that I'm looking at where I have a bearish position is USO on crude oil. Mostly that is economy driven and some other maybe basic fundamentals. But on USO, you can see here that it is up against some medium term and long term resistance. Okay, it bounced its head off of 75 and is pulling back. And the past week, last week, it struggled right around this resistance line and the short-term moving average. So today we had really a flat market in crude oil. We'll see where it's going to go. All right, but really the S&P 500, the NASDAQ. We'll look at one more. Let's look at the Dow. A family favorite, so to speak. You can see the Dow has really been the lagger here and leading the pack lower. All right, so that kind of tells the tale that really it's the tech companies involved in AI that are supporting kind of the NASDAQ and that bullish, potential bullish push, continued bullish push. And then you have everybody else, banks and retail and consumer, that are all starting to suffer. And you can see here in the Dow Jones 30, that they are suffering as well. So Brandon, it's really kind of a confusing market. And I think, some of our headlines kind of reflect that. We'll get to
Yeah.
that shortly. But I think
I
we have a few
think
trades that yeah,
Yeah,
I'm sorry, go ahead.
from what you were, yeah, I mean, just what you were saying, Jeff. I mean, everybody was kind of waiting for that Fed meeting, and now that the Fed meeting's over, they're like, okay, they're taking a breath here, and I think they're going to refocus. And you'd mentioned it already last week. You'd put on a trade for advanced auto parts. So how did that end up turning out, and where are we sitting with that trade?
Well, interesting week last week. I provided really two trades, and one, well, didn't work out, and that happened to be Advanced Auto Parts. Now, this has been a stock that typically does move quite a bit around earnings. The chart kind of was telling me as we went into this that it could have a quiet result, meaning the earnings announcement probably wouldn't generate a big move. However, the stock 6 out of the past 8 times has made a big move. And that's why I wanted to go ahead and take a look and place a certain type of trade called a delta neutral type of trade. Now there's a bunch of them, but in this case it's a straddle around that announcement. So a straddle on that stock around the announcements in anticipation of a big move. Now for Advanced Auto Parts, that didn't happen, and we took a bit of a loss on it. Usually with stocks, on average, it's 4 out of every 4 earnings announcements, there's usually one that will be quiet and it won't move. Now that's on average. And then we have other stocks that do other things, and I'll talk about that at another time. But our other trade, that one made up and more for our move that didn't happen in Advanced Auto Parts. Okay, and that one, as you can see here, it did really well. I mean, it jumped up, and of course, I'm talking about Dollar Tree. Okay, this stock gapped down, ran down hard, and we ended up with a 68% return on risk on the position. And while we lost about $600 on the Advanced Auto Parts, we made around $680 on the Dollar Tree trade. So for the week and for the 2 trades that I gave out last week, we had a positive return. Ironically, the week before was something similar. We took a loss on one trade, we made money on the other, but the amount of money we made on the other more than made up for the loss. So for the past 2 weeks, we've had small winners for the week, and we're just waiting for the next big move, which could come this week. So
Well, I
yeah,
thought both those trades that you put on last week were excellent trades, and they helped diversify the risk in each one of those trades. And you saw that play out: win on Dollar Tree,
yeah,
loss on Advanced Auto Parts. And I know a lot of
yep,
that has to be attributed to what's going on in the market. There's a lot of craziness, a lot of confusion in the market, and I know you sent me some headlines here that will kind of paint that story just a little bit better for all you guys watching. What is happening with this headline here, Jeff?
well,
I'm so confused.
it's kind of crazy. I wanted to put all these headlines together because these are literally one after another throughout the day. And we started with a couple from a few days ago, but the top headline, let's start at the top. Okay, so our Fed chairman says a recession may have been simpler than what waits the economy. Okay, now that is troubling words. Okay, for a recession that would be simpler than what's ahead potentially, it makes you wonder what's ahead. And then you have the mixed messages of the next 2 headlines, where the the Philadelphia Fed President Harker wants to hold rates steady in September. And yet on the bottom, you see former Treasury Secretary Lawrence Summers says we probably need another rate increase. So you have a hawkish Fed in Jerome Powell who says more rates. He's towing that 2% line and more rate hikes are in store. But you have some Fed representatives saying, well, we need to hold. And then you have Treasury Secretary saying, no, you need to raise. And there's all this mixed information. Okay. But one thing that is kind of scary is what's happening to the consumer. All right. And we have a chart here that really goes into what's happening to the consumer. On the bright side, we have very short-term interest rates. Okay, I've talked about the inverted yield curve, where it doesn't matter if it's the 3-month T-bills, the 2-year treasuries, those are paying a much higher rate than the 10s and the 20s and even the 30s. And this was just a snapshot, just a little sample of what is available right now. Now, they say that cash is not a position, but when you're a trader, it is, okay, a position, a temporary place to keep your powder dry. And right now, you should be able to earn a pretty decent rate on your money as you wait for the next move in the market and your next trade. I did, as you can see here, I put in just $1,000. And what kind of rate can I get on a 12-month savings account? And you can see the offers that pulled up from not only big names like Citi and Capital One that are in the getting up towards the mid 4s, but then the smaller regional banks that are paying 5% and 5.25%. Okay. So there you have a little decision to make. Should I go with a little regional and get a little bit more money, or should I go with a big national bank, get 4.5? Either way, you're getting a good rate of return on your money for just sitting in cash, which you should be accumulating right now. Okay, because as a consumer, we're seeing credit card debt really jump right now. We hit the $1 trillion mark in credit card debt in the past couple of weeks. Okay. And then Bloomberg, I pulled up essentially that we have a rate of, 100%. It's 119 actually, debt to GDP ratio in 2023, this year, which is actually the highest it's been maybe even ever. And so combine that, really consumers are thinking really hard and fast of where they should put their dollars. And I can tell you one good place is with, with a publication that is going to is making you money, okay, which is growing that dollar from 1 to 3 to 5 to 10, okay. And that's what you find with our publications that we put out each and every week. So, Brandon,
so obviously oh my gosh, yeah. The economy's in shambles, it seems like, even though we're kind of ignoring the biggest issues here. And these charts kind of tell us that it's in shambles. I mean, we see the debt rising, and I don't know that we've ever seen debt rise this quickly, this fast, credit card debt, because we've never had a situation in the history of the world where we had this post-COVID era. So what does that mean this next week? What trades are you putting on, and what are you looking at right now to be able to get this done? I know we have some earnings coming up and some other things. So what are you looking at, Jeff?
Well, I think that's the most important thing. When the news is confusing, you're not sure what's going to happen with the economy, is watch your charts. Your charts are going to tell you. I told you at the very beginning of the show, right now I'm a little bearish, but we could be changing to another bullish run here. It could happen this week, but we're just going to watch. We're set up for bears right now. And then I have some other stocks that I'm watching. Well, why? Because of earnings. And as you can see, we have another interesting earnings week. The hits just keep on coming, Brandon. I mean, this week we have Hewlett Packard, and we have Salesforce, and we have on Thursday Dollar General, Academy, Campbell's. Campbell's, Academy is retail, Campbell's is consumer. Okay, Hormel, a bank, CIBC. And late on Thursday, we have Broadcom. That'll be really a name to watch in kind of that space for the NASDAQ. And we also have Dell, and really that's about it as far as notables. But Friday, we end up with the U.S. employment report coming out at 8:30 Eastern time in the morning. So out of that group of stocks, I picked several. Actually, I picked two. Okay, I picked three, but one has earnings tomorrow morning. So I wanted to give two other picks so that we could watch them throughout the week kind of together. So the first pick is on a company called Pinduoduo. Okay, PDD is the symbol here. This stock has earnings in the morning. Now, our publication, our Delta Neutral Breakout Strategy, which is an earnings-related strategy. Okay, we trade around earnings and we look for opportunities of stocks that are big movers and have a history of moving big around earnings. Okay, so this one has earnings first thing tomorrow morning, so we can't really take advantage of that one. Okay, but we'll be watching it because the stock typically does move quite a bit around earnings. All right. So the next one that we can participate in is Ciena. Okay. Now Ciena is interesting because when we the risk graph that you're looking at, it seems a little awkward. It's not that perfect V. And well, I had to do something called a synthetic position, okay, to create a perfectly delta neutral, which means zero deltas, as close to zero as you can get. And that's what I did with this one. But you can see that around June, the last earnings announcement, the stock popped up, and it popped up very nicely. And then we have this long period of consolidation. So with Ciena, it's another one on my list. Historically, it's generated some very nice returns on this type of strategy. Okay, so we're going back to the well like we do on a regular basis, and we're looking at this stock again, all right, on Ciena. Now, it has earnings in 3 days, so there's plenty of time to look at a straddle or a strangle, put those on. Of course, if you're a member of our Delta Neutral Breakout strategy, okay, then I actually tell you exactly what the trade is, when to enter, when to exit, and how to take your profits, all right? But then that takes us to our final trade for today, okay? The stock that I'm looking at, of course, is Dollar General. Now, what's interesting here is in an environment like this, you would think companies like Dollar Tree and Dollar General, maybe Costco, that everybody that is on the kind of the budget end of the consumer should be doing really well, but that has not been the case. All right, so we're going to do this straddle. As you can see, pretty much a perfect V there. We're very close to Delta Neutral on this position, and we're looking for this stock to either pop up big or drop big on its earnings announcement, which also comes in just 3 days. So this week we have the one tomorrow morning, which we'll be watching. We'll talk about it next week. But then we have these two that are both on Thursday. All right. And plenty of time to look at those and put on a strategy like a straddle or strangle around them and really look to make some money in this very confusing market right there. So Brandon, what do you think about those three trades?
Yeah, I mean, those each make sense, and I've been loving the straddles and the strangles that you guys have putting on lately because they've been working every week. They help diversify my risk, and we're looking for a pop, and that's all we need, and we're going to make money. So, Jeff, I really appreciate you dropping by the channel today to share your insight and share your strategies for what's coming up this week. Those three trades, we're going to watch that, and we're going to recap those next week. And it looks like our past couple trades, obviously, a net winner once again for the Delta Neutral. Jeff, thank you so much, and thank you all for dropping by the channel today. Thank you for watching the show. Be sure to like and subscribe if you get a second, and go ahead and check us out over there and get signed up for Jeff's service. I'm going to put a link in the description for you guys to follow, and we will see you in the next video.